Okay, we should be live and good to go. Good evening, everyone. Hope you're doing well. Hope you had a nice weekend. Although, I imagine it was like mine, i.e. glued to the screens, nonetheless. Let me know if you can hear me and see my screen. That'd be a great start. I can imagine this live stream being quite difficult without those two things, so yeah. Nice to see Richard, Nyman, Alex, Dixie, Jose, Brady. Fair few new faces also. Welcome, welcome. Nice to have you. Hello, Jonathan. Okay, sounds like everything is working. We'll give it a minute for people to filter in a little bit. And then there's no shortage of things to talk about, as ever. Decent weekend, gents and ladies. Everyone alright? Productive? Glued to the screens? Crying? Alive. Nice. Alive is good. Alive is necessary. Losing from intraday trades? On Bitcoin, Darren, or what are you punting? Stoned, that's reasonable. Dead inside, coping, very relatable. Okay, nice. First things first, thank you to Bybit for sponsoring Technical Roundup. Their links can be found in the description below, and it's a great way to support the stream, keep it free, keep it rolling. So thank you to them. Make sure to check them out for all they do for us. Thank you, Bybit. Second thing, make sure to like the video if you haven't already while this boring intro stuff is going on. Your contribution to that would be most appreciated. Thumbs up and subscribe if you haven't already. We're so close to 12k. And plenty of content coming your way as well. I know it sounds like a broken record, the intro stuff, but I wouldn't ask if it didn't make a difference. That's all for intro stuff, I think. Let's get straight into it. If you remember last week, we started with a short kind of article, bit of news, something to discuss, which is relevant or interesting. That seemed to go down reasonably well. Again, feedback on that point is grateful. Very brief one this week, which I find interesting. Bitcoin exchange liquidity continues on its downward trajectory. So this is from Glassnode. I'm not affiliated with Glassnode, but this is a cool article. And again, the key point being the number of Bitcoin on exchanges has been on a near continuous downward trend since the beginning of 2020. Pretty significant drop-off. You can see that in the chart. And their analysis is that important points for me at least. First of all, it represents a stark difference from the 2017 bull run, during which exchange balances rose rapidly. Okay, and their kind of inference from this data is that you have longer time frame, bigger time horizon players stepping in, withdrawing Bitcoin from exchanges, and are much happier to simply hold it as opposed to have it ready to sell or trade on the exchange. So again, bigger pockets, bigger time horizons, and that's sort of their inference from the data, which is the balance on exchanges and price, obviously. So that's pretty interesting. That's why the title is a different trend, or whatever I've titled it, is because according to at least this metric or this analysis, and we've seen that in the technicals, but also just fundamentally, we have reasons to distinguish it from the 2017 bull run based on the fact that these balances and these buyers aren't just holding on exchange in a kind of trading or a short-term capacity ready to jump out. These are people literally, or entities, whatever you want to call them, literally investing into Bitcoin and holding it off exchange, right? So the kind of urgency to sell, or, you know, the availability of a mechanism to get out of the market is not a priority, it seems, to this group of participants, which is, you know, positive in terms of price, and just, again, seems to suggest evidence of a different type of player stepping in. Now, does that mean that the market's never going to pull back and never correct, and everything we know about market cycles has vanished? I don't think so. I could be proven wrong, but I think the general rules still apply. But what that could reflect in is how big those corrections are, and well, this kind of the same thing. Again, how deeply they go before the same and or more spot buyers or large entities are willing to step in on a dip. And again, if those Bitcoins aren't being held on exchange and are being held in a wallet somewhere, it's likely that they don't have, stop loss orders. Well, I mean, they can't, right? If it's in a wallet, it's not on an exchange with a stop loss order, so that could also mean less or fewer cascading liquidations or downside pressure generally, even if the market pulls back. Again, that remains to be seen, but pretty interesting and somewhat well, yeah, it's just something to talk about, right? Interesting change. So yeah, that's the little bit on why this trend may be different, or it's looked different. It seems like we are dealing with a different type of participant with a different time horizon, time scope, whatever. Okay, that's the little bit of news. Let's get to the charts. Again, not really much going on as far as useful TA goes on the higher time frames, because ever since the high time frame break of this area we had at 11.5, the market has just been gone up in a straight line since that close. And we talked about this pre-breakdown consolidation here, which for me was kind of made up of the bottom of that range and the top of that range. We expressed some skepticism towards how the market may treat this, and you can see it's been just washed through or smashed completely. Nothing yet, and number go up. So nothing really changing on the high time frames yet, but at the same time, nothing easy for me to get involved in looking at the weekly and even the daily time frames, right? So looking at adding some of these levels on the high time frame template, we've just gone up in a straight line. So the nearest candidate for any sort of pullback or support resistance flip would be the extreme / top of this cluster at 16.1 to 17.1. If I'm being completely honest, I always give more weight to the candle bodies rather than the candle wicks. So if we get some sort of high time frame pullback, and we're going to talk about that in a moment in terms of the evidence for it, and there kind of isn't a ton in terms of the technicals at the moment, but if we get a higher time frame pullback, I think the first real area of high time frame structure / support for me is at 16.1, and at that point this is the kind of the really aggressive continuation trade would be shallow pullback into or towards all-time high. Okay, that's kind of the swing template in that case for those who, that'd be the first visible high time frame pullback on any kind of high time frame chart. I was talking to Donald about this the other day and expressing how kind of crazy it is that the last real visible high time frame pullback that we had in Bitcoin was this kind of 10K retest that marked the bottom, right? Weekly break in market structure, retest, up we go. And since then, on the weekly time frame and even on the daily time frame, it's been a straight line up. So certainly my trading style is at a meaningful disadvantage because I get locked out of trends like these a lot of the time. And just generally for those looking for red candles to buy, if you will, in a trend, any sort of meaningful corrective price action which lasts more than a few hours, that style of trading or those entries have had no fun / been locked out. An interesting point maybe, given what we discussed about the Chad spot buyers being the basis for this rally, if we get a sort of higher time frame pullback, there could be a whole class of similar type of participants who don't like chasing price, or will be much more active on dips than the market was, say, in 2017. So the willingness, any sort of dip will kind of do as opposed to no dip. So we may see earlier levels defended as opposed to where we may have expected buyers to step in 2017. So I suppose what I'm saying is it'll be quite interesting to observe, should we get any sort of pullback, how early those Chad spot buyers will step in, or the ones who want that same exposure from a high time frame investing whatever perspective, where they deem is appropriate for a pullback. Because again, if a market's going, just generally kind of trading psychology, a market's going super vertical, even if it's parabolic, there'll be a lot of buyers looking to get in on any sort of shallow retrace, even if the nicer structure is lower down or below market. So applying that to kind of the current chart, if we get some sort of high time frame pullback, although it's not the best technical level in the world just in terms of structure and compared to what's below it, I'd be keen to see whether 16.1, or at the very extreme, although this would genuinely surprise me, 17.1 gets defended. Okay, but for the time being, everything's being smashed, number go up, and no real evidence of a high time frame pullback yet. Okay, and I think that's reasonably self-evident by the chart itself. The same applies for, I mean, look at the 3-day trend, for example. I mean, this is just insane, right? It's just very, very strong. On the daily time frame, this one's a bit trickier. As we've written in the newsletter, like, daily market structure has been fully intact. Not a single fake out, failed breakdown, reclaim, whatever deviation whatsoever. It's just been straight up, right? And when something works so reliably on the way up, I'll generally continue to use it as a kind of valid or reliable indicator. And you can just see on the daily time frame, just any of these red candles have been bid, whatever this pullback looks like, which isn't even visible on the higher time frames, and number has continued to go up. And again, in terms of like, okay, where can we expect trend reversal or a pullback in terms of technical structure, there really isn't much going on, right? We've looked at the weekly chart, we've closed above everything, and there's really kind of, we're trading in vacuum territory and really not much going on. So in those cases, and to answer a question that I've had a couple times, where levels just don't look too great, my answer is, 1, look at levels that should have been, sorry, let me get rid of this. So the question being, market's gone up so much, all the levels been smashed, what on earth do I do to kind of get a context or a setting for this market? There are kind of 3 answers. 1 is look for levels that should have been resistance. There could still be valid support on dips. So the 16, 17 area is one example of that. 2 is look at daily market structure as opposed to levels per se, so the swing highs and swing lows, and see whether the market's offering lower low closes, lower lows, or any kind of shift from the dominant trend. And the third point is simply lower time frame support and resistance. For example, these 2 days of consolidation may look like nothing on the daily time frame, but we'll see in a moment that you actually have 4-hour support going on at that type of structure. So it's kind of worth adjusting. So again, all my levels have been smashed. Is TA kind of bullshit, doesn't make sense, whatever? No. Old resistance that should have been, old levels that should have been resistance but have been smashed are still valid candidates for support. That's point number 1. Point number 2 is look at how price is developing versus looking backwards in the history. So that's kind of daily market structure as a useful indicator. And point number 3, a lot of the time where there may not seem like there is anything on higher time frames, there may be on lower time frames. I suppose the final point you could make is get something a bit more dynamic that plots support and resistance instead of just levels based on historic highs, lows, open closes. You can have your moving averages or, you know, again, trend following tools, which will kind of follow price as opposed to deriving levels from exact historical reference points, right? So that's kind of a quick answer there for those who are wondering. But yeah, going on the daily time frame, no lower low closes, right? No market structure breaks. It's just been very clean support resistance flips the whole way. If we jump down one intraday time frame, an example of intraday structure being clearer than higher time frame structure is, for example, I mean, I personally had this support resistance flip here. I've seen a couple of these kind of demand zones posted as well, close to the bottom of the range. I think both are fine. I don't really have a massive preference as to which one is valid or not. But as a general point, when there is an absence of high time frame structure for you to anchor the market, a simple clue is just jump down a couple time frames. Because at the end of the day, that's what the other participants are likely to be looking at as well. So yeah, that's kind of the clearest stuff I've got. Monthly close is coming up, but it's just completely rinsed the monthly close at resistance, so great. Weekly structure closed above kind of the last real meaningful structure I've got on the chart, because again, all-time high I don't really see as compelling resistance per se. Like, who's going to sell all-time high? And will there be enough sellers versus new breakout buyers to cause a reversal? I mean, maybe in the short term we get some sort of volatility event, but really I don't think so. So on the weekly time frame, 17.1 in brackets / because in dots, because it's not the best level in the world, and 16.1 really being the highest close where I'm interested. So if we get any sort of price action in the other direction, that's the support structure I'll be looking for. First of all, for any kind of intraday bounces, slash knife catchers, but for higher time frame, aggressive continuation towards all-time high, I think that would be something worth punting if it sets up appropriately. And the benefit is of doing business around 16k, if we get that type of pullback, and again, from the daily time frame, there's no evidence of that yet, but if it happens, is that there's a lot of space until the next high time frame magnet slash structure to be invalidated and or flip bearish. So you see it's 16.1 as high time frame weekly support. Again, we usually expect wicks through high time frame structure, so maybe it's 15.8, 15.9, who knows, right? It really depends how the market looks. But the benefit of trading in that area is that if you're invalidated, there's kind of nothing in between one level and the next one, so there's plenty of space to either flip and or get out of trades before price reaches the next high time frame magnet at 14k. Okay, so that's kind of the only thing I could see if the market starts pulling back. What am I looking for? Am I panicking? No. Monthly level at 16.1, sorry, weekly level at 16.1 will have my attention. And if I get a swing long going there, invalidation will be somewhere below it, right? Given the space we described, and target will be all-time high and above. People are still asking for like a swing bearish case on Twitter. I don't really know what that would look like / why. I can come up with some shorter term ideas, like for example, as described, the all-time high breakout buyers might face some heat, and there might be an intraday opportunity kind of above the level, back below it for like a short-term punt. But for swing short, like to get proper bearish this market, it's tough, right? The least I can do, if I want to be conservative, is look for where there's space between levels. So as we described, 16.1 to 13.8 / 14, there's some reasonable space to get bearish there, but it's not kind of high probability in my view, because we'd still be trading within this old range, which is expected to act as support, so not really the best. For me, if I had to look for any type of bearish opportunities, I think the higher probability one would be falling back below the monthly level at 13.8. The high time frame chart would look absolutely dog shit at that point. A lot of faith would be lost, and then I think there's a reasonable swing from A to the upper boundary here at 11.5B. That, for me, is kind of worth capturing on being a bearish basis, but nothing else really at the moment outside of intraday plays. And again, those really haven't set up at the moment. As for my own trading system, as you know, the way the template generally works is, so high time frame structure, right? I'll take a short-term trade, and my trouble area or my take profit will be towards low time frame structure, or it'll be at high time frame structure. It'll be a longer term / swing trade, and it'll be towards high time frame structure. And there's a full video on my Crypto Cred channel, which is on the topic of FTA, and it talks about this a lot. But as you can see, for most, this is like, 95, 98% of my trading outside of some very discretionary stuff. But as you can see, the common denominator is that I require price to be at high time frame levels or in high time frame areas for me to get either day trades and kind of step in front of a first reaction sort of thing, type of positioning, or to get my swing trades on. When the market just starts barreling through levels and doesn't spend a lot of time there, doesn't give me, for example, daily structure. Sorry, mic cut out there. Where was I? Right, yeah. If the market is just completely plowing through high time frame levels and not giving me even like daily, for example, entry triggers at weekly structure, whatever it may be, quite simply and quite honestly, I get locked out of moves like this, which can be a blessing and a curse. Blessing in the sense that I don't have short setups for it either, and I'm spot exposed, net long, whatever you want to call it, Bitcoin, so I'm the beneficiary of not stepping in front of a moving train. But of course, the downside of that is I miss out on compounding and or capturing the rally in a much more impactful and meaningful sense. Now, in an ideal world, as you'll remember, I always talk about momentum continuation setups between levels, whereby you have, for example, high time frame here, right, and you have high time frame level here, and it's about when the market is, say, at this point, capturing what's left between where the market is now and the space left between one high time frame level in the next. As much as I'm emphasizing the importance of having some sort of setup that lets you get positioned after the impulsive move from high time frame structure. I'm just not quite there yet in terms of execution or identifying these conditions, and just don't have the confidence or the, track record, frankly, to put on a lot of size or weight for setups like that. It still remains the case. As much as I'm working on this, my bread and butter remains price developing at high time frame structure. So my views in these live streams, until, for example, we pull back to here, or break through all-time high, stuff like that, until we're somewhere meaty, so to speak, I will be very kind of careful, casual, conservative in what I say about the market. And again, if we're on the honesty train, it's been a very frustrating period, because you'll remember that I longed Bitcoin at 11,920, which I took a full loss on, or kind of minus 0.8 R or whatever that was, just not a winning trade at all. And then I also longed ETH at, I think, 392 or 393, and I got out at 387, so that was like a minus 0.2 or 0.3 R trade, so much less a full-size loser, but still, a losing trade nonetheless. And what's playing out right now is essentially my thesis for those trades. Kind of ETH flipping 400, mega mooning, Bitcoin breaking kind of 12K, and mega mooning as well. But as in trading, the analysis side, great. The timing side was too early, premature, not correct, whatever you want to call it. And I didn't manage to catch, at least on leverage, as mentioned, any kind of portion of that idea I had all the way back in September, which sucks. Frankly, it sucks. But here we are, sharing the nitty gritty on live stream. Does that make sense to anyone so far? Is that helpful, clear? Do you kind of see where the market is for me and all of that type of stuff? We've got plenty of time. We'll look at ETH BTC, we'll look at altcoins, we'll do all of that. How you doing, SZ? Good, mate? When do we expect the pullback? I don't know, is the answer. I don't know. For any sort of pullback, I need to see at least evidence of like a daily market structure break, shift, whatever it may be. And that's not available at the moment. The earliest trigger I could reasonably foresee is price breaking this daily swing. Well, it's not really even a swing low. That's how kind of aggressive this trend is, right? If our typical description of a swing low is a low which has a higher low on either side of it, we've got some weight. Arguably this here, right? But again, not great. Either way, I think the very short-term red flag would be breaking below this daily short period of consolidation we had, which would kind of align with this swing low here, although it's not, this swing low here, which isn't my favorite candidate. Yeah, the first real sign of a pullback for me would be something like of that sort. Okay, ideally, it would result in price getting back below this. I don't know which month this is from. Is this February? The January or February swing high at 17.1. Because it looks like, and I think it's reasonable to assume that in that kind of strong trend, you get a lot of breakout buyers above new highs. And if we get a daily market structure shift leading to price falling back below a level where breakout longs, above which breakout longs were likely taken, I could see some downward pressure towards this weekly meaty structure I've been talking about at 16.1. But until that happens, really no strong or any real argument to, for me at least, to assume a pullback. I think it's reasonable if we have a monthly trend that looks super strong, weekly time frame which is just closed above everything and just eviscerated all levels, etc. The least we could ask for in terms of time frame alignment, confluence, evidence, whatever you want to call it, is a daily loss of support / break of market structure. And that simply hasn't happened the entire time, right? So when it does, I think that'll be actionable. But until it does, this just means this is just smoke and mirrors and means fuck all. Честность вас, конечно же, красит. Спасибо, абсолютно согласен. Спасибо. Стараюсь. Что еще мне сказки придумывать? 3 года этим занимаюсь. So Jonathan says, not the normal 30 to 40% pullback. Do you think the market has changed so much? Well, we discussed at the start of the stream some of the possible consequences of a different type of participant in this market. Do I think that means we'll never pull back 30-40% and have something a bit scarier on the higher time frames? I think there is still a likelihood of something scarier on the higher time frames, but until it happens, I'm just going to play at one level at a time and level to level. I think that's just the reasonable case. And again, there is a lot to capture from a swing point of view, even taking a level to level approach. For example, 16.1 being the kind of top of weekly structure that we talked about. If that fails, and this thing would really start to look weak if that were the case. And again, I'm not suggesting that at the moment, as long as daily support is intact, as it has been the whole way up. But if we get to a point where 16.1 fails, you can see there's a reasonably large sum of downside to capture. Even if it's not kind of 30-40%, etc. Once evidence, or if, well, I mean, it'll be once, I think, evidence of weakness emerges, I think it's important to keep a level-to-level approach and not treat any red candle as, oh my god, that's it, finally, 2020 is topped out and I'm time to short it to zero. I'd much rather be the guy who, for example, takes a punt from here to here, right? And then if the weekly fails, try to catch something from the weekly to the monthly, and then not take basically any of these levels for granted, right? I'd rather trade it level to level, maybe miss a couple of the moves, rather than catch an early portion, get overexcited, and then end up being the reversal, right? It's just kind of more sensible, in my view. I didn't speak German, Frank, I'm sorry. Credit, in the previous live stream, you mentioned about possibly having a lawyer friend on to talk about the FCA ban. Any news on this? Good question, I'll ask him. For day trades, how would you manage stop loss? Ooh, that's a tough one, Darren. Usually close to invalidation, but I think you're asking something quite specific. So I don't have set kind of entry, stop loss, take profit with ratios and stuff. It just depends on what market structure literally looks like. So yeah, that's Bitcoin. Weekly, smashed above everything, so close to all-time high, it's absolutely mental. Don't think I've still processed it. For me, the first real area for a high time frame pullback would be 16.1. Okay, on the daily time frame, nothing has changed so far. Market structure, higher highs, higher lows has been intact the whole time. That would change if, I think, we break below this consolidation here, thus violating the swing low that we put in yesterday, and then that might be a sign of the first real kind of visible pullback. Especially, I think, if we end up failing below or breaking below 16.1, a lot of the breakout buyers from this significant high time frame pivot would feel some heat, and we might see some offloading towards weekly structure into this daily consolidation. Okay, but until then, I mean, happy days, right? Happy days. Nothing too scary here at the moment, right? Yeah, that's Bitcoin. Let me know if it doesn't make sense, because again, not the markets like this or where price is right now isn't necessarily my strongest point. I can only plan for contingencies and try to act on them if/when they emerge. But the simplest I can do it, if you're still waiting for a pullback, I think pullbacks become higher probability if we close below these 2 days of small consolidation. So if we get a chart that, for example, looks like this, right? Daily close below, I think there's a good chance we fill in a lot of this and revisit the nearest base here. Does that make sense? Hope so. Hope so, hope so, hope so. ETH, oh gosh, this is annoying. Again, the same old frustration. My idea was a support resistance flip at 400 or whatever it is, would just catapult this thing because it's got absolutely no resistance until mid 500, 600, whatever it may be. I got faked out by the monthly close and the super bullish reclaim event and didn't manage to get on board this rally, which is, you know, happens, right? Happens, it's fine. What are the structures that I'm talking about? Here's what the high time frame kind of chart looks like, and you can see even as recent as the weekly close. So you've got, I still really like, by the way, if we get high time frame corrective dips, this is an area I'm a big fan of on ETH, just delineating this kind of 470 to 450 area. And why is it important? Well, on the way up, it was the consolidation before the impulse on this rally. overshot a bit here, but perhaps more importantly, it also formed the consolidation before this fucking long bear market, right? So a lot of technical significance there. Acted resistance here recently as well, and then just got completely engulfed on the last weekly close, completely smashed. So where's the market right now? Again, in that type of tricky area where setups for me are far and few between, we are approaching, or basically in the middle of reasonable high time frame resistance at around 700, I think is a decent average. Because again, none of these areas are that fantastic. They're not amazing. Whenever you really start reaching back to like late 2017 type of levels and stuff just that doesn't look that compelling, it's always worth taking with a grain of salt. I'm a decent fan of this quarterly level. So I think, yeah, 600, 700, I think wherever this type of stuff lands, right? For me, it's made up of two levels, 669 and 741. But just drawing a box or taking an average there, I think is totally reasonable. Or if you want to be really anal about it, drilling down on lower time frames, if your zoom out feature supports it, and seeing what's up. But where are we right now? Right now, below high time frame resistance, but above super high time frame support. So again, from my kind of system point of view, I could only really get involved in this market on a pullback event into this type of structure, right? Or potentially on continuation through high time frame resistance. Right now, this just isn't an area where I'm equipped, so to speak, to have particularly strong views. Let me see if I've missed anything. And yeah, part of that was the monthly close juked me out. I was pretty clear and also pretty wrong that this level is fantastic, right? 400. My argument was closed above it, closed below it, retested as resistance. I'll be looking for downside, whatever bearish setups, should they present themselves, to get short into the 300 area. Obviously, it didn't happen, and number go up. Luckily, I wasn't burnt by this. I didn't actually get a setup that triggered, because it just looked so damn bullish. But the cost of looking for shorts and still not getting them triggered is that this didn't present an opportunity for me to flip bias and get long either. I mean, even just looking at the weekly closes, I'd need to be pretty inventive to catch this, because the close itself was at resistance, at least on my high time frame chart. So as much as I'm beating myself up and being a bit harsh, even if I were bullish and looking for longs, this probably wouldn't have allowed me to get on board unless I really exercised some discretion and pulled some strings, so to speak. But yeah, that's kind of ETH. Again, for me, a position of strength would be a kind of pullback to 450s, 460s. This area here, this weekly breakout that we talked about, that for me would be actionable. But we are currently right in the middle of these two levels, so I'm not going to have any strong views there. Yeah, that's ETH. Quite boring, but that's sometimes what we sign up for. And also, just on the general point, I wouldn't be a fan. I mean, maybe for some sort of reaction, but I wouldn't be a fan of blindly selling into these levels, simply because the structure just isn't that amazing. A couple of people have pointed out this area of consolidation here as potential resistance, and technically it's the whole impulse, consolidate, impulse type of structure. I find that reasonable. I think it's fair enough to have this level as resistance, or maybe as some conservative take profit signals, whatever you may be. I'm personally not a huge fan of it, but I would be a huge fan of it if it leads to a pullback to an area that I can actually bloody trade. So do I think this is the best level in the world? No. Would I be taking long profits from A into here? If I were long, probably take something off, ideally as close as possible to the upper boundary. What is my hope? I know that word isn't popular in trading, but my hope as someone who's not positioned in this is that this red box, which I have medium conviction in, leads to a pullback, which allows me to trade in an area that I think is actually good, as opposed to that I think is meh, right? That's about the most I can tell you with where the market is right now. ETH BTC, really curious one. The weekly time frame looks really strong, right? This is something we discussed as kind of the highest close level has been fantastic. Here. Okay, you see, very mean retest candle that spiked the lowest low and closed above local structure. Fantastic. Where would quote-unquote confirmation come from for this thing? I think getting back above the initial lowest close level would very likely confirm if such a thing exists. High time frame trend continuation in ETH BTC. I could see arguably a case of price ranging between these two levels, but with the current strength, I think it just makes sense to observe it how it is. Bounced from a really key weekly level, weekly resistance back above. If I want proof that ETH is going to keep leading or keep going higher and fill in some of that vacuum we talked about into 700, 800, whatever, I'd need to see something like this back above the lowest close level, and I think this would just get wiped and we go way higher into, honestly, kind of here. This area. Close to 0.5. So that's ETH BTC. Looks good. Weekly resistance up ahead-ish. Still some space left until that. If it flips, then we have real high time frame expansion on our hands, which would mean the ETH USD longs would be favorable to Bitcoin longs. Rogue Signal says, do you ever look at anything besides price, volume, /OBV, moving averages, open interest, on-chain indicators? I look at them reasonably loosely. Not in any systematic way, just to provide more context. On-chain, no. Moving averages, yes. Volume, sometimes. Open interest, at times. Funding, at times as well. It's whatever I think will provide me some context I wouldn't have otherwise. Okay, so we've done Bitcoin, ETH, and ETH BTC. A quick yes in the chat if those make some semblance of sense would be great. And then we can jump into Link BTC, YFI, and some of the other DeFi blue chips, all of that type of stuff. Trader Z says, da. Good. So with Link USD, unless it's changed, this thing looked pretty strong earlier. We've had the same level or the same area. I don't know where the hell my lines have gone. Oh, it's because it's the wrong chart. Here we go. Hold on. Marked levels. Yeah. ETH. Okay, it's all the stuff we talked about. ETH BTC. I've got a different level of resistance. I'm just going to add this as well. There we go. All the stuff we talked about. Pretty straightforward so far. Link USD. Okay. So pretty much what matters for me is this pre-all-time high run sort of consolidation. If you recognize the structure, it's kind of like the ETH BTC weekly one we talked about. We have a really strong impulse, kind of in the ETH's case, 2 weeks of ranging, then another impulse, which then acts as support resistance, right? Remember the structure and look at it on ETH. Almost exactly the same thing, right? Big impulse, 2 weeks of consolidation, impulse, and kind of acts as support, resistance, useful pivot, yada, 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 right? Lower time frame on Link, but I still think still valid and still the same technical structure. So here it is, that red box. We've now had several daily closes above it and very narrowly missed it on the down close day retest. But as long as it's above here, technically bullish bias pretty much towards, I mean, this would be kind of silly to ignore this pre-breakdown support here. I think that's, it looks like I'm curve fitting. That's where the market got stuck, obviously, but whatever, you know, take it with a pinch of salt. In terms of trading this thing, again, right now, it's not in the mid, it's kind of in the middle of nowhere. We have local resistance closer to kind of 15.8, whatever, but a whole lot of untested, or at least not meaningfully tested support at 13 to 14. So now that we've closed above and are finding acceptance or being accepted above all those fancy terms, the upper boundary of this cluster, pullbacks for me, I'll look to get positioned and buy dips. Ideally, stink bids for me, or some sort of price action entry as close as possible to the lower boundary, simply because it's closer to invalidation. And then my first trouble area would probably be the high, but then at that point, I mean, we'll see if momentum takes over. I think for a lot of these DeFi type of pairs, ETH itself needs to cool down a little bit without the market taking a huge shit. And then the DeFi altcoins can, which I kind of count Link in, can run a little bit. So we might need to see that change of circumstances for this to become actionable. But long story short, I think as long as no closes below the red box, bullish this thing, and the closer it gets to the lower boundary, the better the entry. Okay, it could be a bit greedy, but that's generally how I trade clusters. Happy to do business at the upper boundary, would love to do business at the lower boundary, simply because risk reward is superior / more optimized, right? And then as for resistance, I've got this again, pre-breakdown support here, but really I think if we bounce off a structure like this, the swing highs are reasonable objectives. Yeah, Link BTC, not terribly interesting, just holding high time frame support, which is awesome. Again, in strongly trending instruments, and this applies to Bitcoin at the moment, a lot of the time, when you get an impulse, you just have to deal with the consolidation as a support structure, even if you're waiting for the high time frame pullback. You might not get it, so you have to do business where the market offers it to you, right? So again, where is the amazing textbook support resistance flip level? It's here. Where has the market been bouncing for the past month or several weeks, whatever? It's the consolidation, right? So you don't always get the macro retest, but you often get the consolidation retest. That's where we are now. Lower boundary held, generally expecting a move towards the upper boundary, which would be in confluence with Link USD moving higher as well. YFI, another one we talked about. I think the last time was actually on this retest here, which held very nicely. I didn't get filled or involved in this. Didn't actually leave limit orders. Don't know why I'm saying I didn't get filled. I didn't get involved in this, but the levels are working pretty straightforwardly. We're essentially dealing with three structures. One is this consolidation, and again, almost exactly what we just talked about. Impulsive move, consolidation, impulsive move. We've seen on ETH, seen on Link. You'll see everywhere, and this consolidation is meaningful. And it may look like a huge area, just the whole box, but as you can see, it's the upper boundary and the lower boundary. Those are the ones which are really important, right? So you don't need to mess around in the middle. And if anything, that's been somewhat confirmed by the price action, given it's been bouncing off of the upper boundary and not just somewhere in no man's land, right? Where's the market right now? Well, we're trading back within the kind of all-time high range. Highest close resistance. We had a bit of an overshoot here. Lowest close support, and that's now been reclaimed as well, right? So similar to Link, the closes are bullish and happening above structure. I'd like a meaty pullback to the lower boundary to allow me to get positioned. I don't really love trading in the middle of nowhere. I like trading at structure. So any type of usual toolbox price action entry at 22s, maybe even take out this swing low and close above the level, you know, whatever takes your fancy at that point. But again, at the level, I think that there's a play there from lower boundary to upper boundary. So from the reclaimed range low into the old range high. And in percentage terms, certainly, and Link is YFI is very liquid as well on leverage exchanges, etc. I mean, a 56 whatever percent move, nothing to shake a stick at in spot terms, let alone leveraged trading terms. But again, we're on a daily chart here. Could take some time to play out, but the basic idea is the same. Reclaim old range low, retest, I'll look for the old range high. Boundary to boundary, fairly straightforward. And invalidation is obviously losing this level. And I think it's proven itself quite well. Does that make sense? And yeah, nothing too different on the Bitcoin pair either. Yeah, nothing too dissimilar. Some of the DeFi blue chips, again, I do think ETH needs to kind of chill a little bit. We will look at XRP. I think, yeah, we'll do Dino coins. Don't worry. Just out of the DeFi blue chips, I think ETH needs to chill a little bit for these to go off. But some of them just look reasonable, right? So Uni, I'm just going to do this kind of off the cuff. I think trading kind of momentum continuation for these things makes sense. It's at resistance right now, but it's spent like a week here, and also undershot the recent lowest close and closed back above it. So if this kind of the only 390, just under $4, is the only real level of resistance I've got. Any type of acceptance or continuation through that, I think will be a very quick move towards, again, lowest close support, highest close resistance, pretty much a $4 to $5 move once we get a close above resistance. And invalidation would obviously be, I think, once you fake out a level, you don't normally fake it out twice. So any close below wherever this lands, 3.5, would probably mean you have to pull back a little bit deeper and do something like this. Higher high, higher low, somewhere in here, and then kind of go from there. But in terms of aggressive stuff, local support, like really tight range between daily support nearby, daily resistance nearby. So it's either the break and retest or continuation or break and consolidation, whatever you want to call it, through 3. I think there's enough to capture to allow for a sloppy-ish entry from one level to the next. As for pullbacks / this level breaking, I'm not a huge fan of all of this, but really kind of 2.7 whatever dollars would be a decent kind of low, low, higher high, and then pulls back for a kind of higher low here, and you're reasonably close to invalidation at that point as well. But yeah, I'm not huge on the pullback scenarios because I don't really love these structures. I think playing strength on the DeFi pairs just makes sense given they jump like 10-20% days when things are going very well. So something like this would be much more reasonable. And again, there's an absence of really compelling resistance structures until the $5 mark there. Aave, I think this one's reasonably clear in terms of technicals at least. You have local support, resistance turn support just under 70. You could even just box it out, the consolidation itself, and use that as a structure. As long as that holds, quite literally higher towards new highs. So I think a good DeFi day will look something like this. Where's your invalidation? I mean, break below the lower boundary, it's probably scuffed, and the next support is closer to the lows at 50. But again, for the moment, you have a bullish retest of support. If DeFi pairs get a bit of a breather from ETH and no closes below structure, I think this is, I mean, look at it, right? It looks strong. And the technicals are reasonably clear on it as well. SNX, just slightly less clear to me. I don't really want to make stuff up if I don't know. So, yeah, nothing really jumping out at me immediately. I mean, local resistance, sure, but I just don't really like when you get these clean. I mean, it's like a sequence of lower. When you get these kind of sequence of lower highs and then like an aggressive trend shift, I'm pretty crap at trading those unless I'm catching like the first pullback. The first pullback after an impulse, right? So if you have like a dominant trend, dominant trend, lower highs, lower highs, lower lows, and then you get an impulsive move which completely wipes the trend, I'm always decent at catching the first pullback where market structure shifted last, right? So where did the last lower low come from? It came from this range. If that gets smashed, it's decent support. Like, I'm comfortable trading these types of moves, but when it starts going from that point onwards, I'm less comfortable, right? That may make sense, may not make sense, but kind of around here, I'm just not that great. If it wants to pull back into kind of mid $3 into this consolidation, that's fine with me. I'm happy to do business, especially at the lower boundary, for some sort of do or die bounce. But where the market is right now, I just don't have a particularly clear read. If it's mega bullish, it'll just do this support resistance flip, number go up, fantastic. But it's just a bit too kind of crowded for me to take any swings, especially when we compare it to how much space a lot of these other altcoins have. It's just not as attractive. Does this kind of structure make sense when I talk about the last shift in market structure before reversal, right? There's kind of the last lower low before this. Maybe I'll do it in another video. But basically, whenever you have... We've talked about this before, I'm pretty sure. Range, cluster that leads to lower low. If it gets bull Zucad, good support, sign of reversal. Range cluster that leads to higher high, market structure break. If it gets bear Zucad, good resistance, sign of reversal. That, right? Yeah, they're called all sorts of things. Breakers, engulfed supply zones, engulfed demand zones. I've seen them called like DBD, SBR. I mean, it's literally dozens and dozens of names for the same price structure. But the basic idea is we pay extra attention to areas where market structure shifted. And if those areas fail to do their job, i.e. lead to continuation in market structure, logically it stands that that is a good sign of reversal. Right? So in that case, anyone wants to... I'm going to take this off the screen. So if you care about it, screenshot it, whatever it's going. 3, 2, 1. So in this example, if we're looking at market structure here, right? Lower highs, lower lows, etc. Where did another lower low come from? Again, whether you want to do the up close candle, I usually just do the lowest close and the highest close, right, to get the full range. Sometimes I just do the highest close, like Bitcoin at 12K, whatever you want to call it. But again, lowest close, highest close. That preceded another pretty huge shift in market structure and lower low, right? So on the way up, as it's rallying into the red box, you're thinking, wow, this should be really strong resistance because it was the kind of origin of the market structure break or the range which preceded the daily market structure break. So as soon as that gets broken, you're thinking, okay, there's a good sign we have reversal here because this was kind of A+ candidate for bearish continuation, but it failed. And when good bearish setups fail, that is bullish, right? So you just get involved on the other side of it. And it works in the bullish way as well. Hope that makes sense. Last trouble area, yeah. Band is a good example of these consolidation structures. Impulse, consolidate, impulse, right? Which you get in strongly trending instruments. So quite simply, again, highest close, lowest close, with the top and bottom boundaries being support and resistance. That's kind of any pullbacks ideally. I mean, upper boundary if we're in a real bull market territory, right? Lower boundary if it's do or die mode. If you're not comfortable with that, which is reasonable, there's always the I'm shit at this, but have to chart it anyway. Momentum continuation entry, which is the low made before the breakdown. If we get above that, these guys won't be comfortable, and there's a good chance we squeeze for those highs. But where the market is right now, away from support and away from the flip level and kind of local resistance, so not hugely interesting to me personally. Sushi. I think this one is reasonably straightforward, which is we have a cluster of support, lowest close, highest close, lowest close here at about $1.20. Same structure, impulse, consolidate, impulse, whatever. The consolidation is important. This is support. It's probably good for a bounce, I think. Again, if DeFi is going to be bullish, etc., etc., this is kind of your nearest high time frame structure. And the first trouble area for that, arguably, this lowest close support resistance flip, but I think it's much more likely we head for these lows here, the base before the lower low breakdown. So for Sushi, 2 levels. One is this cluster. Then we can just be a bit conservative and use the last layer pre-break. The only idea I can reasonably generate is something like this, okay? As always, upper boundary if you have to, lower boundary if you can, because it's close to invalidation. A to B. Right, that kind of makes sense to me. And if this fails, the lower boundary fails, then it's scuffed, then it's probably going to come back and retest some of this crap. So yeah, 2 levels, pretty straightforward, right? Cluster, resistance. That. If not, then dies. I'm not going to do the DeFi perp. Apparently it's weighted really uglily and not particularly indicative of a reasonable DeFi basket. Also, if you've learned a single thing so far, make sure to like the video and subscribe while I'm rambling. It does help a lot, and I'm very grateful for the ones who take the time to do it. So thank you. Even if you don't, thank you for being here nonetheless. Let's keep going. Curve. There's some fundamental stuff that's quite wacky about this, which I'm not well informed about, right? In terms of the emissions and all that type of stuff. I sound like a complete ignoramus, it's because I am. But purely in terms of technicals, as long as it continues to respect my random arbitrary lines, I'll continue to be a fan, right? So I think this is the range we're in, between kind of 60, 0.6 and 0.9. So if you're on the momentum continuation side of things, I think as soon as this breaks out, and psychologically that would kind of align with breaking $1, there's a good chance it kind of squeezes towards the next base, and this just kind of starts looking like a high time frame reversal sort of thing. So that'd be pretty sick. In terms of nearest dips to support, I think this old high at 0.6 is the kind of do or die level for any dips here, right? Something like that. Why? Because there's kind of nothing on the way up until this double bottom. So a lot of these DeFi pairs are kind of cool because you have really clear do or die type of levels, and if they don't do immediately, you just get out, right? It gives you clear invalidation. Sometimes in the market, you'll have like a nice level here, and you have a nice level here as well. So this one, you bid this one, and it breaks, and you're like, and then the market starts pulling back, and you're sort of like, well, this level failed, maybe it was greedy, maybe I was greedy because there's a really good level here, and it becomes a bit difficult to trade, and you have to prioritize and make difficult decisions, unlike a lot of these DeFi pairs, where you have like one good level, and if it fails, you know that shit's probably going to die, right? So for me, that's that type of level at 0.6, and we have the same type of overhead resistance at 0.9. So if you're a momentum continuation crew, pretty much local breakout through $1, I reckon that'll find some feet, especially if it's like a good day for the blue chips, and just start filling in a lot of these old support resistance flips, okay? If you're more of a do or die dip type of person, wicks into 0.6 at this high, probably a decent candidate. Again, the first trouble area is resistance here, but then, you know, if that dip gets bought, there's a good chance it just kind of, again, cascades and goes higher. I think it's worth zooming out and not just looking at levels for this, right? You have a really aggressive downtrend, a bit of a base, and now you've got a break in market structure. So that's usually a pretty strong sign of reversal, right? Strong downtrend, slowing in the downtrend, break in market structure, typically shift in trend, and you kind of just mirror the other side of, you form that big smiley face. Downtrend intact, downtrend slowed down, downtrend reversed, right? So worth being aware of how this is developing aside from the levels itself. Rune, I don't know. I don't know. How does that sound for my analysis? I simply don't know. I just don't know if I should give this any weight. These old highs here, because this is just like listing. When this thing got listed on Binance, at least. Is there a nicer one on FTX? Is there like a Rune perp? Oh, there is. Okay, let's do that real quick. Of course there is. Okay. I'm comfortable-ish with a level at 0.8, but I'm also cautious. We had a low close market structure break on the daily time frame. I think the better candidate for dips, if there is going to be one, as you can imagine, I'm going to map out this consolidation here. As always, it's not the whole box, it's the upper boundary and the lower boundaries which matter. So let's quickly outline those. Highest close, lowest close. And the lowest close is arguably a slight. I mean, the midpoint is nice because it aligns with all these previous highs. But generally, up here, it looks somewhat heavy, right? We're kind of arguably in lower high territory with a daily break in market structure. If that gets reclaimed, sure, you kind of have a moon candidate on your hands. I'm just not a huge fan of this type of structure here. I much prefer the cluster. And again, why is the cluster important? You had an impulsive move, consolidation, and another impulsive move, which just clear market structure shift and wiped out whatever this is. So that for me is better support than hunting for like this, for example. Okay, I think this is good enough, right, as a level of support at 0.81. But just given how much clearer a lot of these others are, you don't have to make a compromise and pick shittier levels, right? Let me just add a few of these so we remember where they are. I won't even label them. We just kind of know, right? Yeah. See how these develop over time. Kudos for the efficiency. Thank you, Richard. We try. Oddly enough, I have been live streaming for like 3 years, so I guess I'm somewhat more comfortable than I was in the past. Ooh, did I have that? No, I had the lowest close and the highest close, I think. No, we talked about... yeah, this. There we go. Band... I'm just leaving these lines on so we can revisit them, and you can even use them if you want, although I don't recommend it, for the next live stream and see how things have evolved since then. Also, some news which I haven't tweeted or put out anywhere because I don't want to commit to it, but there is like a 90% chance that if Bitcoin breaks all-time high, I will redo my entire technical analysis series from scratch. It's like the whole thing, everything I know, from risk management all the way to God knows. I mean, apart from the very new ones, FTA and trade management, which are all very recent, like I'll basically remaster the trading course thing, technical analysis play series from 2017. I'll just literally redo it and make an updated new 2020 version, which I think would be cool and nice for the newer entrants as well, before they get sold like 100 different shitty trading courses. So there's that. Gotta get the bull market views, yeah. Sorry, I'm just filling out any questions I'd be happy to answer in the meantime while I'm just diddling here. Doodling, not diddling. I'm definitely not diddling. God, English is so hard. Think that was it. Something like that. Okay, cool. That's done. We have our DeFi blue chips marked up. Alkim says, is also coin Bitcoin pairs are important for you to plan entry? Or to check for health check of an altcoin? Yes, I think for checking the health of an altcoin, it's definitely helpful because you want to see how your altcoin is doing against Bitcoin, right? If you're going to take a risk on positioning on an altcoin, it makes sense for it to be at least outperforming simply holding Bitcoin, which you're probably doing anyway, right? So that makes sense. We actually wrote a whole section on it in Technical Roundup. I'll try to repost it somewhere, but we have like the 2 pages on does it make sense to look at the altcoin Bitcoin pair. So yeah, I think it's still relevant, but I don't use it to plan the entry. I use it to get an understanding of how strong the instrument is, if that makes sense. Let's look at some of the dinosaurs. We'll look at them against Bitcoin first. So LTC, BTC. It looks okay. Also, yeah, subscribe if you haven't already. Thank you for the viewership and your patience today. This looks alright. Again, my general approach to this is if I have a high time frame, this is weekly, right? So one candlestick is a whole week of trading. If I have a really strong high time frame dominant trend, I'm generally going to need a lot of evidence for signs of that trend being reversed, right? I think that's reasonable. High time frame trends take a lot of time to, for the most part, to reverse, or at least if it looks like this, I'm going to need more evidence to be convinced that it's not just a lower high or a dead cat bounce, but indeed something more meaningful. In terms of where the market is right now, I've got it as resistance at this pre-all-time low cluster. I think to get reasonably bullish, at least on the Bitcoin pair, it needs to do more. For me, there's kind of a line in the sand here, and it's a really good one. This was the low preceding this rally, which kind of made a higher high, broke down, lower high, and led to a lower high, which then made the lowest low that we've had so far, right? So a lot of kind of market structure related significance to this level, as well as just being a basic badass support resistance flip. So that lands at around 55, 56, right? So getting above that, ideally on a weekly basis, and at that point this would be a higher high relative to this swing. So kind of weekly market structure shift above key SR. That would then be good enough evidence of some sort of mid-term, at least, reversal in Litecoin Bitcoin. And there'd be some upside capture, I think, pretty much from A to B. Right? I think that's fair enough. But from where the market is right now, it's just kind of not good enough. You know, it's at local resistance. Even if you want to go back all the way to this cluster on the weekly, which I think is reasonable and that we have in the newsletter, you can see the levels are the same. I just need to see a little bit more, right? I need to see a little bit more. XRP BTC, this thing's gone absolutely apeshit. We've been bearish on this thing in Technical Roundup since, I don't even know since when. I think it's been since this 2400 Satoshi level, right? And our target was pretty much lose the... I don't have any levels for this, do I? know. Lose the cluster top, the top of this candle, and it'll go to the bottom of this candle. And it came bloody close, right? It closed below the bottom and reversed like just ahead of the level. Missed it by what? What is this roughly? It's like 2%, right? Which is whatever. But it's been developing pretty bullishly since then. On the weekly closing basis, do you remember that little thing we talked about with market structure shifts on the weekly time frame? Kind of the high which leads to a lower low, or the low which leads to a higher high. That could potentially be in play here on XRP BTC. Because if you look at this leg, this swing high preceded a lower low, which broke market structure. Right? So that high is considered, at least for me, to be significant because it's a kind of market structure shifting level. So it should have been good resistance on the way up. Instead, it looks like it's going to break, right, and fail to act as resistance. Again, highest close preceding a move down which made a lower low. So it should be resistance, but it looks like it's going to get fucked up, right? So that should be then good support. Any sign of bullish continuation or kind of set, if we're talking setups, at around 2500 would look something like this. And in terms of objectives, I think your real first trouble area is this highest close, which had a fake out level here at around 2600. And then if that fails, probably, yeah, something like that. This old support resistance flip here. So just to make that clear, the big level where I want to see a close above and ideally a pullback, if it goes straight nuclear, like I'm just not going to have a setup, I'm not going to lie to you. This is the one. Any pullbacks into there, close above and then pullbacks into there, or any wicks, dips in that area, whatever you want to call it. First trouble area, extended target type of thing here. Okay? Does that make sense? BCH, not much. Still needs to do way more. Things been fucked for a while. Same with EOS, and we talked about Link. As for the USD pairs, XRP, USDT. We will look at ZEC, yeah. Yeah, I mean, just really bloody strong, right? It's very unlikely I have something for this unless it wants to pull back to the area which broke market structure kind of in the first place, right? Again, this swing up, this highest close led to or preceded the lower low. That's important, so we expect it to be good resistance, and it's a bit less liquid or whatever, so we can use the whole candle here. The only time this would be kind of actionable for me, again, aggressively, you could always just look for where is there a level and look for shallow dips and for the market to move higher. That's totally fine, like, as a strategy, right? You have, like, what even remotely resembles broken resistance? Well, if the market's really bullish, I'm going to bid for wicks or stinky bids at those nearby flip levels and get involved there. Totally valid strategy, but not my strategy. And I try to avoid teaching or commenting on stuff that I don't really use myself, right? So that's fine from just a charting TA perspective, potentially, if this is going to keep going north. But for me, this is much more reasonable. And maybe it'll align with the kind of XRP BTC pullback that we talked about as well. And that lands at around 30 cents, this type of market structure level. Okay. What else are we talking about? ZEC, yeah, of course. So the Bitcoin pair first. Yeah, I mean, not a whole lot in the short term, for me at least, in the Bitcoin pair. It's got that similar type of bottoming structure again and again. Like, you'll see the two structures we talked about the most are the impulse, consolidation, impulse, right? We've seen that all over the place. And the other one is the reversal one, where you have a leg up, right? That leg up makes a lower low, right? So you got the leg up, then the downswing from that makes a lower low, and then the high, which preceded that, gets engulfed or fails to act as resistance, right? Here. And so that is your kind of sign of reversal. The close above the high, which led to a lower low, right? The close above a high, which led to a lower low. So you kind of, so those are the two patterns. Impulse, consolidate, impulse, that's one. And then this being the other kind of bullish reversal one. And looking at that similar type of pattern on the Bitcoin pair, you sort of have it here. Again, really far from the best example, but nonetheless, you have this swing higher, makes a lower low, right? And then has been engulfed at the moment. So we can kind of delineate, as we've done previously, either just the high itself, or if you want to be more conservative, and I think this is reasonable for the most part, lowest close, highest close as support. If we have a bottom or short-term low in the Zcash Bitcoin pair, the lower boundary should hold, so dips into this should be bid into what I expect the pre-breakdown level at 0.005. Okay, so signs of Zcash reversing against Bitcoin will be something like this, and as we know, closes below the bottom boundary are no bueno. As for the USDT pair, I don't know is the answer, I think. Which I'm more than comfortable saying. Yeah, I don't really have strong views here, to be honest. The best I think I can come up with for this, and you can tell it's forced, because not super comfortable. This kind of structure here, that swing high before the big nuke. Look, pay attention to this, right? Leg up, huge market structure nuke. Remember this, it reminds me of, structurally, Bitcoin at 12k here, right? Not one-to-one, I'm not a fractals guy, you know, not my thing, but in a reasonably similar type of vein. Leg up, you got that single green candle, right? And then the big nuke, which breaks market structure, and then reversal sign when that level gets broken. Again, I was looking for longs on this type of setup towards the upper boundary, and I got fucked out by the close. Closed at the level, and the next day just teleported higher, and no pullback since then. Sucks, but c'est la vie, right? So going back to Zcash, I think we can transplant a similar type of technical structure, maybe with somewhat lower conviction, but hey, you asked for the chart. If it were down to me, I just wouldn't fucking touch it because I have no idea. CryptoPath is bullish ZEC, and he's an amazing trader. Doesn't mean you should FOMO in, but just kind of why it came up on my radar. At resistance, technically here, but in a similar, perhaps, Bitcoin path above the upper boundary through whatever that is, 83, 84, might end up kind of clearing out the top of this range here. But I think if this is a valid choice of structure, which I'm not entirely sold on, I've got it as resistance at the moment. Okay, wow, we did a lot of charts today. Not complaining at all. Very good to kind of freshen up and get our levels sorted. Any final questions before I jump off? And make sure to like the video if you haven't already. And if you enjoyed any of the charting, lessons, patterns, it is good feedback for me and for the duck, so we know what kind of content to continue to offer. And we'll try to get more charts done next time, but as regular viewers will know, even for us, this was kind of a lot of charting. As ever, the newsletter comes out tomorrow at 8 p.m. UTC. TechnicalRoundup.com. It's free, so make sure to go sign up to that. We'd love to have you and always try to add more value there beyond just the charts. Thank you to Bybit for sponsoring Technical Roundup. If you enjoy this show, if you enjoy the newsletter, want to keep it free and to show us your support, make sure to visit their links in the description below. That would be fantastic if you so please. And that's all I've got. Newsletter Tuesday, Duck Wednesday. Hope you had a great weekend, a fantastic trading week ahead. Feel free to rewatch the earlier portions for the reasonably straightforward plans for Bitcoin and ETH, signs of a pullback and so on. Grateful for your audience and attention as ever. Have a fantastic week, and I will see you next time. Bye-bye.